one of the big fears is my job going to be taken away by AI?
Dario Amodei, the founder of Anthropic, famously said that 50% of white-collar workers would be gone in a matter of 2 years. And so we're 1 year in, and we're actually seeing the data suggest we also take a very close look at what the banks are hiring for. And so we're seeing the leading banks hiring people who can take and look at a complex organism or enterprise and rethink it through the prism of AI. OpenAI was definitely the favorite a year ago. 50% of the banks were using OpenAI. Now it's only 25% coverage that OpenAI has.
The latest publication from Evident, your company. Why is JP Morgan holding the crown?
Everything that we track, they're just
If you work anywhere near AI, finance, or the markets, this is a conversation worth listening to. My guest is Alexandra Mousavizadeh, co-founder and co-CEO of Evident AI, the leading intelligence platform for AI in financial services. In what easily could have been a 3-hour deep dive, Alexandra and I distilled our discussion into a sharp, efficient 30 minutes. We cover this year's findings from the Evident AI Index, which ranks the global leaders and laggards in AI usage and maturity, and the critical role talent plays in turning AI investment into real productivity and performance gains inside the banks. Alexandra's vantage point is unmatched, and her insights are as close to the source as it gets. Hi, Alexandra.
Hi there. How are you doing?
I'm great. You are fresh off a return from Davos. From your perspective, obviously Davos includes AI globally and across all markets, all industries. For the sake of today, we'll primarily focus on financial services. Let's talk about the pace with which AI is picking up within the banks, what those banks are doing well. We'll get into the Evident AI Index and specify some banks as well. But the 2026 version of what we're talking about, as you mentioned, AGI and various other developments, the 2026 version is very different from our last conversation, the 2025 version. What's new this year, and how is it impacting financial services?
Yeah, so I think a lot has changed just in the last 6 months. We're definitely in a new era, and that new era is about sort of real execution. What does that look like? The leading banks have of course, been in execution mode for a while, but mostly across that sector, it's been 3 years of testing, rolling some things that were not as complicated from a governance perspective into production, particularly in the back end of the organizations of the banks, internal processes and so on. But now very much into executing on a carefully laid out AI strategy that is moving forward. So most of the banks will have spent the last, the first year and a half really testing and what's this about and generating ideas in this ideation phase and sort of looking at point solutions to now having written the AI strategy. It is in motion. It is being executed. And so now it's all about how do you do this at scale? So it's down to how are you going to build something that can take whichever model is best for whichever use case? How are you going to make sure you've got a platform that allows for you to learn and reuse capabilities that you're developing in one side of the bank and reuse them in another side of the bank? So what's the architecture? So I think that's a big question right now that is being debated. Of course, what are the things that you need to do on the governance side, especially if you're doing this sort of all covering enterprise-wide platform, sort of in that you're also building in the first and the second line of defense your governance structures. That's not easy. And so you're finding that pathways are being selected. Some are building everything themselves. Some are saying we're absolutely not doing that. We're going to partner, or we're going to buy solutions, but they're sort of ending up in the same way, right? In terms of getting these use cases into production and onboarding and KYC down the lines of the retail banking in terms of, customer engagement, wealth managers really having set up now tools that can really help analysts provide, better tooling and better advice for their clients. You're seeing ramp up in those tools in private banking and investment banking and asset management and wealth management across the board.
Definitely.
And of course, the leading banks have been doing this for a long time. So you're entering this positive flywheel effect where you're able to really start moving employees onto these platforms, right? And you're really enabling your staff, so your non-technical staff, and that's what we're starting to measure. Is not just how deep is your talent stack of who can build it, but also how much are you actually rolling
Users.
out, so you got your users upskilled and really using those AI tools to do their jobs. And that, at the end of the day, that's where everyone wants to land.
I could go in 14 different directions based off of that statement alone. Let's go with the users just for a second, right? I think one of the big fears for the second half of 25, and that still exists a little bit right now, is generally, is my job going to be taken away by AI? And most leaders in this sector are saying, no, your job is going to be augmented and you just need to work with it and live with it. As far as users are concerned, right? Maybe not the technical staff. Let's think about traders. Let's think about wealth managers, things like that. Maybe non-technical risk managers. Give an example of how those individuals are maybe partnering with the technologists, but also educating themselves and incorporating into the day-to-day. Bankers, of course, how could I forget? These are investment banks after all. How they are upskilling themselves and what they're doing to use AI to better themselves in their world.
Yeah, so I think there's sort of two really important questions in that. One is the skills and training, right, to get these tools as they're being rolled out to get that kind of productivity gain that the banks are hoping to get out, right? So, and we can get into the numbers in a minute. And I think the second question, which is probably where I'm going to start, which is about this question of augmentation and replacement. And I think, one of the things that was debated in Davos between Dario Amodei, the founder of Anthropic, and Demis Hassabis, the founder and CEO of DeepMind, Google DeepMind, is there's a sort of a tension or a disagreement in terms of timelines, and timelines for superintelligence, but in timelines in terms of what job displacement might look like and when. And Dario Amodei has famously said, which he said last year at Davos, that 50% of white collar workers would be gone in a matter of 2 years. And so we're 1 year in, and we're actually seeing the data suggest the opposite. So when we bring it back to the bank side, our data, and as you know, Jesse, we track everything to do with AI adoption, deployment, use cases, return on investment, usage, uptake, everything there is, which means that we also take a very close look at what the banks are hiring for overall on the AI side, and also upskilling their employees. And what we're seeing is that the leading banks are actually seeing an increase in headcount overall. There's lots of pockets that where headcount is actually reduced, especially on the sort of internal operations in the back offices, where you might have a KYC team. Part of what their job was to review documents in paper documents or PDF documents, and taking time to review them and upload the information. And absolutely, for sure, that is moving towards automation. Some have automated what you call the maker documents by as much as 40%. And of course, there'll be headcount reduction there. But as the AI tools are rolled out across all of these functions and lines of business, and we're talking about the bankers themselves and people who work in wealth management and so on, they're able to actually do more and grow their market share. And so they can reach more clients, they can do it faster, doing a better job. It's still really early days, we should remember that. And so what we're finding, and I don't know if you followed the Goldman Sachs' earnings calls, right? But they are saying, as was JP Morgan, there's more spend on AI, right? There are definitely areas where they're cutting people, right? Taking costs out, but they're also hiring more into growth areas such as private banking, investment banking, and wealth and asset management. So what this is enabling is actually enabling the banks to do a much better job and to grow their market share. That's what it looks like right now. The organizations that are AI forward or AI sort of mature, sort of on a relative scale, are the ones that are hiring the most AI talent. That is going up by about 25%, but also the most, have not a reduction in headcount, but actually have an overall increase. So I think when we're looking at this, and if we extrapolate, because that's what we do try and extrapolate to come up with some sort of what does the world look like in a couple of years,
Yep.
then the job reductions or the headcount or the job displacements, it seems to suggest that it would come from companies that don't invest in AI. Because right now, what we're seeing is that the leading banks are the ones that are hiring more across the board. The banks that are lagging and are sort of haven't started yet are the ones that are not hiring AI talent, but also cutting across the board simply because they're slower growth and they're not growing their market share. So I think that is, I'm not saying that there won't be job displacements. I just think that it will come elsewhere. And if you look back, it would come from those businesses that are not investing in AI. And if you look back on the internet, the beginnings, right? We had exactly the same predictions as in, the end of education and the end of white collar work, and we would all be living on UBI by now. What we did see, of course, was there was displacement, right? But there were a lot more jobs that were established and they overtook the jobs that were removed. What I think the stats is that for every one job that was lost, 4.7 were gained. And from the data that we're looking at, we can see that that is a story that is repeating itself here in the AI age. Of course, as the technology gets better and better, and as we sort of approach, some form of super intelligence, which means that you've got systems that are self-learning completely, it's very hard to predict work and jobs in that environment. But if and I think, if you look at what the time frame for that is, that we're looking at sort of 5 to 10 years out, or that at least is what Demis Hassabis his timeline is with what he's suggesting it's going to be. And I think my money is probably on it's going to take longer than the version that Dario Amodei is suggesting, which is that it's around the corner. And on skills, what we're seeing in the leading banks, that they're making it mandatory, right? That is, it's not a nice to have, it's a have to have. And the success, the banks that are getting most out of their AI tools are the ones that have made it mandatory, top down. This is, you have to have this training. You have to be able to do X, Y, and Z. You're going to get really specific training in your particular area of work. And we want to see that you're using AI consistently throughout the day for all of your tasks, because we've made this available. And once people get going on these and using these tools, you also see a real uptick in employee satisfaction. People are grateful that a lot of the things and PowerPoint decks and pulling information together is now so much easier than it was just a year ago. But we do see that it is the banks that make it, do it if you want to, versus those who make it mandatory. There's a big difference in terms of productivity reported out of those banks.
And I want to get to that in just a moment. You kind of nicely segued us into the talent side of things. So we'll just discuss that just for a moment. I think something that I take away from what you just mentioned there is the leaders are scaling purposefully, right? Whereas a few years ago, or the prior generation iteration of this was, take traders, take bankers. They had to work well with technologists. They had to just simply understand the models that were being built, right? Can you make your trade using whatever it is, Python, C++, whatever, and understand what the technologists are developing? Now, the current or modern iteration of that is the AI-based versions of that. So I want to touch on something that you and I spoke about previously, which is actually a takeaway from the NeurIPS conference that I know you were at a few months ago. And that's kind of the elimination, as all of these developments are taking place, the elimination of superfluous kind of space, right? The efficiency of models. And I think that ties nicely into what we just talked about, which is the usage of them internally. But how are these users, whether the technologists building them or the bankers, how are they determining and how are they realizing, what efficient models are and putting the superfluous excess to the side?
Yeah, and tying it back to talent, what we are seeing is hiring of people who really can work out what model do we need to use for this particular task, right? And sort of making sure that it then is, it's not too big, right? And you use the word superfluous, like let's not use some massive, expensive model on sort of quite a narrow system, right? So, and it's interesting what we're seeing is and we're actually just putting together some of the data that we've seen on wider use of different types of models, because we track all of the use cases, and we in that context track which of the vendors are used for what use cases and what models are used for what use cases. OpenAI was definitely the favorite a year ago. 50% of the banks were using OpenAI. Now it's only 25% coverage that OpenAI has. And it's not because their models aren't good, but it just sometimes will be a question of the other offerings on the table for the banks will fit particular types of use cases. So you just want to have a mix of things. It's not that banks won't use OpenAI, but they'll also use Anthropic, and they'll also use Google Gemini, and some will use DeepSeek and Quen, and some will use Mistral, and some will use Llama, right? And most of the big banks use all of them. It just depends on what the use case is that we're talking about. And then you also, starting to see much more use of small language models, because you might not need the large one. And then there's the fine tuning, right? So we see a lot of hiring, there's a lot of engineering in that. We see the leading banks hiring people with physics backgrounds, with biology backgrounds, with mathematical backgrounds,
Climatology backgrounds.
exactly, because another thing that we're sort of seeing is that the technology is there. I mean, the newest Gemini 3 is amazing, but actually for many of the problems or use cases in the bank, you actually don't need such a sophisticated model. But what you really, really do need are people who can think about the systems. Like, you think about the bank as an organism, and then you've got to think about complete systems rethink or process rethink. And so we're seeing the leading banks hiring people who can do that, who can take and look at a complex, or organism or enterprise, and rethink it through the prism of AI. So
Mhm.
those are very difficult to find and to hire. Everyone's competing for that type of talent, because 10% is the technology, 90% is the shifting and transforming the way that the work is done, the workflows, rethinking the workflows. And so that is also, and right now, a lot of the banks that we're, working with and talking with are looking at, what's this bank of the future look like? What does a fully AI forward bank look like 4 years from now? And how do we then work our way backwards? And even, and we're sort of toying with this idea about, you might want to, we all might want to try and design what that North Star is. And so essentially you're building maybe a brand new sort of synthetic version of a big bank. And then you're trying to sort of work the big bank organism sort of into that new synthetic version of
Mm.
itself. And I think that's like the best way to think about it, because otherwise, if you're just slapping AI on existing processes, sure, you can get 10, maybe 20% productivity gains, but you're going to hit a limit. If you rethink the processes completely, you can get to, 80% automation, 90% gains, because you completely rethought the way that the systems are done. And I think in an age of AI, that is what you need to do. So if you are leading AI teams and, in a bank, I would sit down and I would spend some time to think about, if I were to rebuild this bank from scratch and build a synthetic version of it, what would that look like? And I would take that to my CEO and saying, this is where we need to go, and then build the roadmap for that.
It's so interesting. I think one of my bigger takeaways from that point that you make there is that everyone needs to know, and everyone needs to be efficient with it, right? Again, to use these roles that we're describing, the bankers, the investment bankers, and the decision makers need to realize which AI tools, which models are informing their decisions best, and need to be able to communicate that with the developers, rather than just the developers presenting something and saying, just use this, and say, oh, okay, sure, right? Everyone needs to be on the same page of understanding what makes that efficiency that you're referring to. And I think from an optimistic lens, to take the technology out of it for a second, these are all human decisions. These are critical thinking. You even used the word think just now. The people, the humans, are the ones who need to make these decisions in which models, in what's most efficient. And that's a sign of life. That's optimism for the future, that it's not just all robots and technology. This is being driven by human decision, which I think is a really important takeaway. So, just to be conscious of our time, I want to quickly kind of like move to and close out with the latest publication from Evident, your company. Obviously, the 2025 version of the Evident AI Index. You've made so many references so far to leaders and laggards. You've referenced, obviously, the leaders are still the leaders. So let's just point out the obvious. JP Morgan, top of the list, third or fourth year in a row, right? And you've mentioned, the leaders are doing the same things. The laggards are the ones who are kind of like, well, if you want to do it a little bit more passive, let's say. So just one more time, I think, firstly, a brief overview of how you calculate the ratings. So obviously, you have talent, innovation, leadership, transparency. What does that mean? And second, why is JP Morgan holding the crown? And if you look at number 2, Capital One, right? I sense a theme there: retail and what have you. Obviously, large data sets. Tell me why these leaders stay leaders and why they're going to stay leaders.
Well, thank you, Jesse. Yes, the 2025 edition landed end of October, and we saw a really big shift, of course, in the last year. The rankings remained the same, with JP Morgan leading, Capital One in the second place, RBC in the third, and so on and so forth. But under that, if you double click on the ranking, you look at the scores. And there was a huge up and to the right in this round. Like, the entire sector, everyone was super active, but what was interesting was that the leading banks doubled, or they 2x the rate of the average bank in the index in terms of activity. So the leading banks are just moving, at double pace now from the index average, right? And the laggards are really falling behind. So the gap between the scores, the leading bank scores and the lagging bank scores, has just grown. And that just, goes back to this question around, it is a little bit of winner take all. It is a question of, if you started early, like the characteristic of the banks in the top of the index is that they got on it early, right? They have been completely relentless. They have not questioned too much the spend, right? Because it has been in the mindset of course, you need a budget to run the bank, but the budget to change the bank has to be a larger proportion, or is a larger proportion, of the overall tech spend compared to other banks. That's another characteristic of the leading banks. Talent, moving talent in, pull every innovation lever that you have, all of everything that we track, they're just doing it at double pace, is what the leading banks are doing. Now, there is still a window for, if a bank, decides actually we're all in, there's a lot of learnings, right, that you can take from the leading banks, the best practices. You can make a pretty quick decision what you want to build and what you want to buy. Providers out there are now, they've been working with other banks some early days, made some mistakes, figured out what works, what doesn't work. So you've got enterprises like OpenAI and Google and Anthropic and so on. They have honed what it takes to work with enterprises. So there is definitely still time if you want to leapfrog. The difficulty there is of course getting the talent in. There's a lot of places that the talent can go. They can go to startups, they can go to other big banks, they can go to big tech, they can go to academia, and that's where we see, the talent is going across. They just want to be in a place where they know that they can work on interesting topics and interesting use cases and interesting conundrums. And they want to be in an organization where they know AI is prioritized. And so that is one of the key things that one needs to do if you are leading a bank that might not be top of our index, but they're sort of getting going, is like make it crystal clear that this is actually a priority. We're seeing, even since October, so much happened since then, right? And sort of everyone trying to figure out this question of how do we scale? How do we build platforms that are model agnostic? Everyone's testing agentic AI, figuring out their workflows and how it sort of fits with the agentic tools. And and experimenting with that. The leading banks have agentic use cases in production. You have agents that are built that, BNY famously has their agents, they've given their agents identity, and they've got really specific remits, and they know how they're functioning alongside other agents. And as a manager, you've got to manage not just people, but you've also got to manage agents that are augmenting a lot of this work and discovering new things that you can do. I think people don't talk enough about that. You're looking at a workflow, say a KYC or an onboarding piece of work. There's a lot of that AI can do better because it can automate, but all of a sudden you're also able to do autonomous ongoing monitoring, which you weren't able to do before because humans can't do that, but AI can. And so all of these new things are opening up because of AI. So we're seeing this uptick in activity that I just think is going to, rise exponentially. It's still a bit of a, we're still sort of some years out from seeing this really hitting the bottom line of the banks. We are tracking very closely cost to income ratios, which is really exciting because, we're sort of looking at how that, is correlating to the banks that are leading in the index on AI. And we're starting to see sort of a tightening on that correlation and share price as well. But as you know, there's a lot of noise in bank stocks, and banks do very well with or without AI in volatile markets. So there's that as well. And we've got very volatile markets right now, but I think we're sort of starting to sort of see the beginnings of this sort of really starting to have impact and a marked impact on the cost to income ratios, but also in banks' relationship and NPS scores with their customers. When you've got AI in the back end, you just see much higher satisfaction scores. It's more seamless. They're not bothering you with things you don't need. It's anticipating your moves in a way that's sort of really helpful, right? So you do get those customer satisfaction scores are up with the banks that are using it behind the scenes in their chatbots and in their interactions and so on. So we're really starting to see this now bear fruit, which is, of course, really great.
The general rising of the tide, I think, is so fascinating, and obviously the proof that it has arrived. Last point I want to make, I think one of the magic words of today, or especially what you just mentioned, is investment. Right? The banks that are leading are investing, obviously financially, but they're investing in talent. And as this is a talent podcast at the end of the day, let's just finish on the fact that it is the talent that makes up, how these leaders stay leaders and use the developments to, maximize their gains and their ROI, as you just referred to. Are you finding that the talent is coming mostly outside of industry and that people who are in, big tech or startups want to join financial services? Or are you more finding that these banks that are the leading investors in it from a cost perspective and the 25% increase in hiring, are you finding that they're actually growing this organically and they just have really smart people there from the start that are able to raise the tide internally and organically?
So I'd say that, banks like JP Morgan, Goldman Sachs, Capital One, and sort of most of the banks in the top 10 already have a really impressive talent stack, an AI talent stack. They can draw on a lot of in-house expertise already, and they can say, right, I'm going to point this expertise to this part of the bank because we've got to solve this conundrum. And that is happening. And that is when you're putting experts alongside your, heads of lines of business and business units. That's when you see the real magic happen. And so those banks that have yet to, build that kind of in-house expertise, and we talk to a lot of the banks that are actually building that right now. Of course, we talk to the banks that already have it, but the ones that just in a meeting yesterday with the European Bank was going through, like, so you're building this sort of the brain of the bank with a great pool of people with sort of scientific method thinking. And I asked, where you're hiring from? Our data would suggest that it is from, academia, from other banks, from big tech, and so on. And he confirmed that was where they're hiring from, but really from so many different places, from startups, from businesses that they buy because they're solving for a particular issue in financial, in one part of the financial, and then banks also typically invest in a lot of startups precisely for that reason. And then they would acquire the companies and then take the people in,
Acquire the talent.
right? And acquire the talent. So they get a lot of great talent that way. And a lot of, hiring from academia, someone who has a PhD and something really specific, you want to onboard that talent. We're also just seeing this it was an interesting discussion about a lot more hiring of people with physics background and mathematical backgrounds, and people who can think about systems and organisms and how that works, because essentially that's the kind of thinking you want to have in-house. The thinking that is slightly out of the box as well. So it's really, really an exciting time to actually, I would say, I wouldn't have said this some years ago, but today, like working as a scientist in a bank is exciting. You're allowed to experiment, right? You're allowed to really think big picture and think out to the real outer edge of the technology capability and what it might mean, right? So we're working with some teams in the banks that are thinking about, well, when super intelligence comes, right? When systems can learn by themselves and embed what is learned and draw on that and a constant learning organism. What does that mean for financial services? So we're seeing this already being thought through in the banks. That's so exciting. What if we did that? And that's where, again, back to building some kind of a synthetic version of the bank is where you can where you think about these things. What if this organism actually, or enterprise actually could do exactly what it's doing, but it's completely reconfigured and it looks very differently. And you're learning about, way that organisms are organizing themselves, and you're putting that thinking into that systems change. So back to the talent, right? It is they're drawing from all kinds of places. Being in banking, I think, and we're just observers of it, right? But being in banking is a very different place, I think, today, because, all of that thinking is poured down into, the lines of business. So if you're in the investment banking team, you're working closely with people who are thinking like this. How can we think out of the box to make what you're doing and what you're delivering and how you're delivering it in, maintaining a human in the front end, but making everything in the back end work way more seamlessly and making you just so much better at what you do. And to your point where you started, right, it is human-led. That is because a human has to input into what would work best, right? And then it's these scientists and these systems rethinkers that help to come up with ideas of how to completely reorchestrate this. It's just getting more and more interesting and exciting from a technological perspective and also from a human and talent perspective.
We haven't mentioned the word productivity once yet. We've said efficiency a few times. It's really all about productivity. And look, banks and hedge funds alike have always wanted science-backed degrees, right? Or science-based degrees, physics, mathematics, statistics, as you say. But now the scientific application is so much more granular and so much more, liberally minded than singular of how are we going to run a bank. It's such a, like you say, an ecosystem. So let's close with that. Thank you again for being here. It's good to see you again. And as always, such a fascinating, cutting edge conversation. So as always, I really appreciate your insights.
Thank you for having me, Jesse.
That's all for today's episode of Searching Smarter. If you found this conversation valuable, be sure to subscribe so you don't miss an episode. Until next time, keep searching smarter.